let's do a reaction video. We'll do something wrong.
Having recently raised a funding round at a $180 billion valuation, SpaceX is believed to be the most valuable privately held company in the US. It's not hard to see why investors are so interested in the company. Of the 212 successful rocket launches in 2023, 98 of them were done by SpaceX, giving them almost 50% market share. Their Starlink satellite internet service is used by millions of people around the world, generating billions of dollars in revenue. SpaceX has raised an estimated $9 billion from Sequoia Capital, Andreessen Horowitz, Peter Thiel's Founder Fund, Fidelity Investments, and many others. And it's not just...
Yeah, so in order to make it a reaction video, you gotta do other things. You gotta make it mainly the reaction video, otherwise you're just reposting someone's stuff. So, just trying to get the sound levels right. And let's see what else we can do. We can split screen. How about a split screen, and that way I'm doing something else. SpaceX is, in fact, not listed publicly, but there is Destiny. Let's see. I don't know what their ticker is. Destiny Logistics? No, DXYZ. So this holds some SpaceX, and you can see that I got some major hype. And it's completely collapsed. There's no way for you to get in that SpaceX. So,
venture capitalists that have bought into the hype. In March of this year, a closed-ended fund holding shares in SpaceX listed on the New York Stock Exchange. Retail investors piled into this fund, at one point pumping the valuation up to a 2,000% premium over its net asset value. However, there's an important aspect of SpaceX which could drastically alter the risk-reward profile for investors. Musk has made it clear for many years that his ultimate goal with the company is to launch manned missions to and eventually colonize Mars. By his own admission, this will cost tens of billions of dollars. Whatever profits SpaceX ever generates will likely all be used to fund Musk's Mars ambitions. Little, if any, SpaceX's profits will ever be distributed to shareholders. The value of any business is the present value of future cash flows. But if all the cash flows will be consumed by the Mars mission, maybe the company isn't worth anything at all. In this video, we'll look at the history of SpaceX, Musk's motivations, and why it might be little more than one giant grift.
SpaceX history.
SpaceX was founded by Elon Musk in 2002. His idea was to create reusable rockets which could launch satellites into space for a fraction of the prevailing cost at the time. From the very beginning, he also had the motivation of eventually sending humans to Mars. In 2001, before he even founded SpaceX, Musk was involved in the Mars Society, a non-profit organization that advocates for human colonization of the Red Planet. He appears to have been involved in the Mars Society by the Mars mission. Musk himself says his main goal in accumulating material wealth is to fund the Mars mission. If he wants to do this, it's his prerogative. Musk has an uncanny ability to raise billions upon billions of dollars for his companies, despite openly saying shareholder returns are not his main goal. The likes of Fidelity, Sequoia Capital, etc. have a fiduciary duty to maximize returns for their own investors. It's hard to see how funding Musk's Mars pipe dream could possibly be consistent with this. We saw something similar with his acquisition of Twitter in 2022. Musk's motivations behind buying Twitter were ideological, not financial. He made no secret of this. Yet he was still able to raise billions of dollars from many of the same investors who were invested in SpaceX. The results have been disastrous. There may be a greater fool aspect for the venture capitalists who invest in SpaceX. Even if they never receive dividends, they can still make a return by selling their shares to someone else at a higher price. Given Musk's popularity, retail investors may be drawn to investing in SpaceX, despite the corporate governance issues. Recently, a closed-ended fund called Destiny Tech 100 listed its shares on the New York Stock Exchange. About one-third of the fund's portfolio is invested in SpaceX stock. Destiny Tech 100 is the first ever opportunity for retail investors to indirectly invest in SpaceX. The fund's net asset value is about $5 per share. As of the time of making this video, its share price is $15, which represents a 3 times premium. At its peak, retail investors pumped the stock price up to $100, which is a 20 times premium. If you want to learn more about Destiny Tech 100, we released a video about it on our second channel, Broken Business Models, linked in the description below. The venture capitalists funding SpaceX today may be hoping for an eventual IPO, which would allow them to cash out by dumping their shares onto retail investors. From Musk's perspective, he likely doesn't care how much his stake in SpaceX is diluted. If he's never going to pay any distributions to shareholders anyway, his economic ownership of the company is irrelevant. And thanks.
So, it's just one of these hit pieces that you don't like the guy and you want to come up with a video or something. Like I said, it's a great channel. Check them out. I love their videos. Not much to talk about in this video.